let's take a look at the day's opening calls and some stock specifics. James Gerrish joining us from Shaw and Partners and author of Market Matters. James, a very good morning to you. We were just speaking of iron ore there at the moment. That price sitting around $100 a tonne. What are you seeing going forward, given perhaps what's going on in China? It seems to have moderated a little there, just given those concerns about growth and that demand for ore and what's going on with steel making. What are your thoughts?
Yeah, good morning to you, Andrew. I was just listening to the previous guest comments just around the iron ore space. And I think that they're interesting because it sets out one perspective around the iron ore price itself, but then you've got to be thinking about what the equities are doing. So, obviously China's over the last couple of months has been moving to slow down a number of parts of their economy, but they've just in the last couple of days made moves to start to re-stimulate the housing market. They've eased up or directed some banks in China to create more loans. That's a positive for housing, which is a positive for iron ore. And I think it's important, and we saw this in the stocks yesterday. Fortescue was up nearly 10% yesterday on the back of iron ore futures being limit up in Asian trade yesterday. Stocks moved sort of 6 months ahead of stocks price 6 months in the future. So if you think about where the market's going to be in 6 months, that's what you need to be positioning for in terms of your equity holdings. So look, I've turned short-term positive, I should say, on iron ore. So we were one of many trying to buy Fortescue Metals yesterday, added into the portfolio. We haven't had it in the portfolio for a couple of years, and now we've seen pretty good risk reward down here at current levels around the $16.50, $17 mark.
Yeah, that's interesting. Just as far as Fortescue is concerned, James, of course, BHP has one very big foot in iron ore, but it's moving away as far as oil is concerned. Of course, we've seen that deal sealed between BHP and Woodside.
Yeah, it is. I mean, over the last 12 months, BHP's generated the bulk of its earnings out of iron ore, more north of 70%. That proportion of iron ore earnings is going to decrease over the years ahead. So they're going to be more of a, we talk about BHP being a diversified exposure to commodities in Australia, but in recent times it's been dominated by iron ore. As we look out in the years ahead, it's going to be something like 50% iron ore, 50% other commodities. That deal that they've announced, or they've got the green light to merge the energy division with Woodside. I think it's this is one of the rare deals that seems to be positive for both parties. And it's rare you have deals that are positive for both parties. Generally, there's one winner, one loser. But the combined entity under Woodside, I should say, has benefits for Woodside in terms of their production profile, in terms of their balance sheet, and it also has benefits for BHP in terms of where they can then move that or transition that capital into going forward. We know they're keen on potash and they're making investments there, so they can become a more well-rounded, ESG-focused commodities company that's got more of a focus on these the buzzword future-facing commodities, Andrew.
All right, and James, let's take a look at gold, where that's travelling at the moment. Of course, the gold price has come off in the last couple of days. That's off the back of that decision, of course, to give Jay Powell another 4-year term. We're seeing that volatility as far as at the short end of the yield curve is concerned. The prospect of inflation, yet obviously also with the prospect of rate hike sometime in the middle of next year. How are you looking at gold at the moment? Because it did awake from its slumber, it has come off. Are you bullish or not?
Yeah, I'm bloody frustrated from gold, to be honest, Andrew.
Right.
So all the underlying things to push the gold price, bar one aspect around interest rates and the trajectory of the US dollar, have been in play. So gold's your traditional hedge against inflation. We've seen huge inflation numbers pretty much globally on the back of a resurgent economy, on the back of huge amounts of stimulus going to the system post-COVID. So the ingredients for gold to rally have been there. All the smart people say that gold should be rallying. every time it gets its head above 1800, something knocks it on and it drops pretty sharply. So it's been a frustrating call, and I think in the short term, the trajectory of US interest rates going higher, particularly at the short end of the curve, as you made mention of, is going to provide a headwind for gold. So, we've actually increased our gold weighting on a sustained break through 1800. That's now failed. I'm now neutral at best on gold in the short term. I can sort of still see the medium term trade there in gold, but it's to me it's when something should be rallying and it doesn't. It's obviously some underlying weakness there. And as I said before around iron ore, equities price 6 months out. And the equities have actually, the equities haven't appreciated in line with the gold price. So they've dropped further, then they haven't rallied as far. So all a frustrating trade for mine, Andrew.
All right, any particular gold equities that you're seeing value in at the moment?
Oh, there's plenty of value there. I mean, the cheapest gold stock in our coverage is Regis Resources, RRL, trading around $2. They've been under the pump over the last 12 months. Evolution has done made a really good acquisition on the corporate side in the last week or so. That looks really interesting. Newcrest has got, from a reserves in the ground perspective, it's a very cheap global gold company. But these stocks can stay cheap for a long time. They need an underlying commodity to be moving in the right direction. You get the commodity right, you generally get the stock right in terms of the commodity complex. So gold needs to be going up for these to go up. It's not in the short term. So all the value in the world can be there, but it just needs a catalyst to turn. I think you need to see this, a change in the dynamic around US interest rates for that to happen.
James, thanks for joining us from Shaw and Partners.